All right, let's move from that stock, which hasn't done so well, to some good news for dividend investors. Many of you like to play dividend stocks. Well, the number of S&P 500 companies paying them now at the highest level in over 10 years. 402 of the 500 companies are sharing this well. My next guest says dividend stocks are the safest bet right now in the markets. Jim Frischling is on set with me. And you've always liked big caps. You've always liked dividends, but you're really pushing now the dividend story. Why?
Well, part of it is I think the move of these companies, the increase in companies paying dividends, is in part a resounding endorsement that this is a very low-yielding environment. If you look at money market funds, it's sub 1%. You look at the 10-year government around 1.65, and even if you think about single A, corporate bonds, 10-year corporates, the 2.25, 2.5 range. So really, there is a lack of yield, and for investors who are searching for yield, I think these companies are responding to their needs in this environment.
I want to throw some names out there to kind of give our viewers a sense of the companies that we're talking about here. You've got Verizon, that's one of the top known dividend payers. You've got a Johnson & Johnson, Pfizer, GE, AT&T. I mean, do we kind of just go for these names? Now that the dividend paying universe is broadening, do you say that we go for maybe some other names as well?
Right. Well, I think the attention that dividend stocks are getting is well deserved. It's been a long-standing strategy, let's say, of some of the more mature investors, certainly those who are, I guess, living on more of a fixed income. So that makes a lot of sense. But I think you still need to be,
you can say older.
I can say older?
That's all right,
I think you need to be, but you now need to be very selective. You look at a company like GE with about, I think, a 3.4% dividend yield, and they've been paying this dividend for 50 years. You look at Johnson & Johnson, I think they have a 40-plus year history of paying these dividends. So it's not just about the companies that are paying the most. I think it's important to look at these strong companies, good companies, but ones that have a consistent track record of paying these dividends.
What about somebody like an Apple? I mean, if you look like an Apple, that's a well-known stock. Big growth story, has been for a long time. Do you put them now into the same stable of choices as your AT&Ts, your Pfizer, your 40-year companies?
I think Apple's really interesting in terms of, I think it's the first dividend they've paid since 1995. And you look at Dell and some of the tech companies, I think more tech companies are now paying dividends, and I think that's always been a struggle for them because here they are, these growth companies, they need a lot of their capital for new products and innovation, and yet even they, and I think it's close to 39 or 40 of the 70 in the S&P are now paying dividends as tech companies, basically saying we know our shareholders, we know the investors are looking for yield, and if they want to attract that type of interest, they're going to have to pay dividends as well.
One caveat, I'm going to put one hole into the plan here, just FYI, is the fiscal cliff. If we get to the end of the year and everything expires, Bush tax cuts expire, dividend taxes, that's going to go up to 43%.
I think one of the
15% right now.
I think one of the challenges, you're 100%. First of all, the fiscal cliff is a real issue. We believe they're going to find that compromise, although there's going to be volatility, there's going to be drama, both sides of the aisle, Republicans and Democrats, going to point fingers.
But then why would I be buying a dividend-paying stock, Jim, if I'm watching all this and I don't trust Congress? Why would I do that?
Again, it's a good question. I think the answer is, if we look at today's dividends, I think 30 cents in the dollar of a company's earnings are going out to dividends. That's compared to a historical number of about 54 cents on dollar. So I think companies have room to do more, and I think one of the considerations is going to be, when the tax situation becomes more clear, I think companies have room to navigate. Again, they're paying dividends. That's a good thing. They're paying less than they used to in terms of percent of their earnings, but they have room to pay more, and I think the political uncertainty is one of the reasons they're paying as little as they are.
Hopefully they can just figure it out, even if it's after the first of the year, and that way we can figure out our taxes. I mean, it's all about the taxes, Jim.
It is. It's not how much you make, it's how much you get to keep.
Exactly. Great point. Jim Frischling, good to see you again. NewOak Capital's Jim Frischling.